Hey, someone just showing up here. Well, Moaz, how you doing? Just getting started. Haven't quite logged in on everything yet. Yeah, that's a big fat freaking no. Loading, loading. Okay, so go live there, and we'll be live here very shortly. Almost ready. Almost ready. Hold on a second. Just getting the ball started. All right. All right. All right. Now, let's go down here. You've got to be kidding me. This thing's been recording all this time. Oh, that's interesting. Okay, let's close that out. Got to open it back up again. Hey, you guys. Hey, Mike. Doc. Sorry, Doc. How's it going? All right, got to get the broadcasting going on the bottom. Bud. Bub. Oh, Bub. How's it going there, Bub? What's happening there, Bub? Lance, what's happening? Harry, nice to see ya. Just getting things started still, so give me a few more minutes. This is working fine. How is my, nope, that's not working. Audio is not working. So, hold on a second, I get the audio working properly. Audio. Nope, that's not it. Audio input, there we go. Audio input, okay. Bloody jolly good, USB, here we go. Bloody jolly good. And how are we doing? How are we doing? No, what do you mean? Hello, that thing's not freaking working. How about the other one? Hello? Hello? Neither one's working. Damn it. Just sit tight for a little bit while I get the audio working properly. Okay, got that. No. All right. Let's try it one more time. Audio input. Audio input. Yeah, I want the USB. Hit OK. And then we're testing, testing. No, 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 no. Shit. Audio input. USB camera, I don't want that. Microphone array, Realtek audio. No, it's freaking USB. Hello, hello, hello. It's not working. It's not working. What's the matter, James? I'm trying to get my microphone working. My microphone, I just got those recently, and some strange reason. Let me see if this works. Hold on a second. See if it needs to be charged. Damn it. All right, let's try it one more time. All right, let's get rid of that. Get rid of that. Desktop mic. That's not working. That's not working. Okay? No, still not freaking working. So, we having issues with the microphone. Great shirt, you like that? I hear good from here. Yeah, that's on TikTok. I need to get YouTube working properly. Uh-oh, there we go, right there. YouTube's not working properly. Audio input. Audio input. Let's see if this one's working. That one's working just fine. Well, alrighty then. We're gonna get started. Nike. Yep, we're gonna take a look at Nike. I'm feeling much better. Hey, Albert. Hey, I recall. Hold on a second. I recall a smart guy recommending you do shirts and hats. Yeah, did you like that? It's in there. What the hell were you thinking? All right, Picaris. Hey, James, can we talk about how you manage a losing position when the strike falls too low? Picaris. Hey, mamas, Milo. Besides WBA Nike, what are you looking at this week? Well, hold on a second. I'm glad I'm feeling better. Thank you. What do you think about Marts? Really? Marts? All right, hold on. Let me get YouTube up and running first, okay? So hold just tight. Mr. Wheelchair Capone. What's up? You look better. Thanks. I feel much better. All right. No, it's not for children, and it's for entertainment purposes only. And okay, it should be ready right about now. All right, stop recording. All right, can anyone do me a favor? Anyone is so concerned about your health. I know, isn't that wonderful? Okay, so can someone tell me this on YouTube live? How is it sounding? Is it sounding okay? Because apparently this microphone's not working because I have to use the microphone up on the camera. So I'm gonna turn this one off. I'll have to play with that tomorrow or the next day. I hate it when I have issues. Issues are never a good thing. Okay. AGNC. All right, well, let's go over a few first. There was a few that was before. You know what? Hell, let's do AGNC real quick. AGNC. AGNC. I can't really tell an AGNC. TikTok sounds fine. Yeah, TikTok sounds fine because the camera's right there. YouTube, I'm concerned about YouTube. Can anyone check in YouTube, see how YouTube sounds? And if YouTube is up and running? All right. All right, so AGNC, let's take a look. Can't really tell because here we are at 958 and the 950 is going for between 7 and 20. That's too big of a spread for us to be able to figure out. But if the premium is going to have to be at least 17 cents, because you're buying it at 958, selling it at 950, so you're losing 8 cents right off the top. So it's really going to depend on what you're going to be able to get your premium for. Because right at the moment it doesn't look that good. And worse than that, let's take a look at this. Back in the beginning of April, here she is. She goes up, pulls back up, pull back up, pull back up, pull back up, pull back. Now, this baby's going to drop. So I'm thinking not next week, but the week after. So it might be something you want to keep in mind. You know, how long? Oh, AAL. Hey, Jimmy, you're back again. Check out Burke, Hive, and CYBR. Wheelchair Capone. I haven't heard of any one of those. Most likely, when you drop a stock symbol on me that I've never heard of, usually it's going to be a no. BIRK. No. Sorry, that's a no. BRIK. Hive. HIVE. That's going to be a no. $3. How can you possibly think $3 stock is going to have 20 years of increased dividends? I mean, think about it. Okay, hold on. Let's quickly take a look at Hive. Hive. No dividends. Sorry, Hive is a no. That's a no. Okay, CYBR. Never heard of them either. Okay, see, here's the thing. This is the problem. You know, wheelchair component. Okay, here's the issue I'm having. Now, I've been doing this for 20 years. So if you think there's a stock that I have missed, make sure it has 20 years of increased dividends and weekly options. Other than that, it's going to be a no. So CYBR. Let's put in the stock symbol first. CYBR. Yep, no, sorry. Okay, it's a monthly. Okay, I don't do monthlies. Monthlies just don't pay. Now, for those of you that are new here, YouTube sounds good. Thanks, Mama. Mama, don't let your babies grow up to be cowboys. Okay, MOTS, really? MOTS. No options. That's going to be a no. What is this on my face? Everything's in my face. All right, wheelchair component. I'm going to address this specifically to you and the other people that are new here. Okay, I only like stocks that have 20 years of increased dividends. 20 years, that's 2 decades. Increase year after year after year. Not once in a while, not, you know, whenever they feel like it, every single year, year after year after year. Why? Why do I like companies with consistent increases in dividends? Well, number one, if they have 20 years of increased dividends, more than likely they are profitable, because a dividend is nothing more than our share of the profits. Hey, Amora, good afternoon or good evening. Or you're in the Philippines, so it's morning. How are you doing there, my dear? All right, so as I was saying, 20 years of increased dividends. Why? Well, 20 years of increased dividends means the company's over 20 years old. If it's over 20 years old and they successfully increase their dividends every single year, well, that means they're profitable. Why would I give my money? Now, this is just me. Okay, if I'm wrong, you know, hey, you guys do whatever you think is right for you. I do not want to invest my money into a company that is not successfully profitable. That means year after year after year, more and more and more profits to the shareholders. That's me and you. Once we start buying the shares, we become shareholders. We own part of the company. Okay, which when we own part of the company, we are entitled to a portion of the profits. And that portion of the profits comes in the form of a dividend check. Now, every single company you see me investing my own personal money into, well, they have increased their dividends every single year for 20 consecutive years. And they have weekly options. Okay? Now, there's a difference between a weekly option and a monthly option, and it's very, very simple. A company that offers monthly options is only 12 per year. That's it, 12 per year, 12 months in a year. Now, a company that offers weekly options, well, there's 52 of those in a year. Now, I'm not a college graduate. Okay, I'm basically a nobody. I'm not an investment advisor. I'm not any type of counselor. I'm not a financial advisor. I'm basically a little guy that got tired of being screwed around by the man, you know? It's like, hey, invest your money and get, 3% per year, get 5% per year. Or, hey, here's a CD rate, it's giving you 1.2% per year. Yeah, sorry, I got the brown end of the stick way too much. I found this trading strategy. The way I found this trading strategy is, back in 2008, my daughter wanted to invest. Hey, Matty boy. Hope you got my message the other day, Matty boy. Okay, that's an awesome tip for somebody your age. My age, no, it's a little bit different for people my age. Now, anyway, what you guys might want to know, Matt was talking about a company that found a huge cobalt. Is that right? A huge cobalt reserve here in the U.S. So he wanted to know who you would get in touch with in order to find out who is profiting from that huge lithium or cobalt. I don't know, one of those things, but it was really cool. All right, anyway, so as I was saying, I forget what I was saying. I think I'm saying something like don't get old, because you forget things quickly, and I was just talking about it a second ago. Oh, here, I remember now. Okay, so back in '08, my daughter wanted to know how to trade because she was 9 years old and she saw her dad trading every night. So she asked me, Dad, can you teach me? So I said, sure, why not? So I had to come up with a trading strategy for a 9-year-old. She's not a Mensa student, okay? She's not in special education, okay? She's not in advanced math. She's just a regular, everyday girl. Well, she was. She's 25. She's going to be 25. Holy cow. I don't think I'm ready to have a 25-year-old daughter. Anyway, all right. I blame it all on the wife. Ex-wife. I blame it all on the ex-wife, because I didn't know, It's like when you have sex, you have no idea what's coming out the other end. So it was a girl. All right, great. Anyway, she's wonderful. But here's the thing. At 9 years old, she didn't know anything. So I had to come up with a trading strategy for a 9-year-old girl. It had to be simple. You're going to see a lot of fives here. A lot of fives. You ready? Simple, safe, predictable, consistent, and no way she could lose. Okay, that's the 5 criteria I had to overcome. Okay, so I came up with 5 simple rules. Rule number 1, never buy something you do not understand, you do not want to own long term, or you just don't get it. Now, everything Wheelchair Capone mentioned off, okay, he mentioned 4 companies. I hadn't heard any one of them, okay? Most of the time, you guys are going to ask me companies, take a look at stocks I've never heard of. Now, I've been doing this for 20 years. So if there's a company out there that has more than 20 years of increased dividends and weekly options, I like to think that I know who they are. Okay? Now, I've been doing this since January. That's 6 months, 2.5 hours a night. Okay? Out of everything. Hold 1 second. Not quite over that cold thingy. Oh, whatever that virus was. I forget where I was. That's cool. So anyway, as I was saying, 20 years of increased dividends, weekly options. Okay, so here's the 5 criteria. Never buy something you don't want to hold long term because you just might have to. Now, just to let you know, longest I've ever held anything. Now, don't forget, I've been investing for over 20 years. Longest I've ever held anything is 9 months. That's it, 9 months. That was Kimberly Clark. Okay, now I like Kimberly Clark. Was it Kimberly Clark? KMI? Yeah, Kimberly Clark. Well, in that 9 months, I caught 3 dividends and like 20 premiums. Okay, the stock was, and then it went down, and then it came back and it went back up again. Okay, now somebody asked earlier, how do I handle a stock that goes down? Well, we're going to talk about that in a little bit. But back to my 5 rules. Never buy something you don't want to hold long term. Never sell at a loss. Make sure the company has 20 years of increased dividends. Weekly options, and make sure the numbers work. What do I mean by make sure the numbers work? Well, what am I going to buy it for? First thing in the morning. Okay. Now, if you're not familiar with the trade grid, okay, give you the last trade of the day. Okay. The bid, the ask, the volume, the open, the high, the low, the close, all that kind of nice stuff about the stock itself. Okay. That's just the information on the stock itself. You can get that information from anywhere. What's a little bit more harder to come by is the option chain. Now, if you know anything about stock options, there are puts and there's calls. I don't do puts at all. Puts have negative connotations. They give me a negative vibe, and I don't like it. That's just me. Okay. It obligates people to do something. It means I'm forcing someone to do something, and that doesn't go well with me. So I just don't do it. So I stick to simple. Okay, remember, simple, safe, predictable, consistent. No, that. Simple, safe, predictable. Okay, so I buy a stock, and I sell a call option, which gives somebody the right, not the obligation. That means if I buy it for 19 bucks, and Tom wants to buy it from me at $19, well, he's going to pay me a premium. And that is 22 cents a share. that 22 cents a share goes to me directly, immediately, right away. Excuse me. That goes to me right away. All right. Now I have a debit card and a credit card attached to my trading accounts. So if and when I need to pay my bills, it's just make a few sales and then I'm good to go. So anyway, that's besides the point. But I buy it. I buy a stock. I sell somebody the rights through what is called a covered call. Now, a covered call is one of the safest trading strategies there is. Okay, it's safe because you already own the stock. And then you're selling somebody the right, not the obligation, the right to buy it from you by a certain time, which means if I buy this first thing Monday morning, okay, and I sell this $19 strike price first thing Monday morning, whoever bought it from me has the right to buy the stock from me at $19 anytime from the moment he buys the option from me until it expires. And this one here in particular, July 24th. That's this coming Friday. Okay? All right, so that being said, hopefully when you guys rattle off some stocks that you want me to take a look at, I'm kind of hoping, okay, just kind of hoping, you make sure it's 20 years of increased dividends and weekly options. It makes the day go by so much faster, okay? Because I like to think that we're here to help each other out, okay? Now, I've committed to being here for the rest of the year, okay? So I've been here since the beginning of January. So 6 months, I've only missed 2 days, okay? So, that being said, let's get moving. What else do we have to look at? Now, I know I missed a few. Milo wants to take a look at Nike and WBA. He said that WBA, Walgreens. Now, we all saw what happened with Walgreens lately. It's just been tanking lately. Okay? Down, 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 down. And what happened on Thursday? She was at 15, what was it? 1564, and then she drops down to 12. Okay, that's a big drop. Okay, from 15 to 12, that's a $3 drop. That's almost a 25% drop. All right, so 25% drop. So what did I do? Well, it's Walgreens. They're in every major city in the United States. Yeah, they're having a little bit of issues here and there. They're trying to trim the fat, so to speak. Okay, so until the administration decides to prosecute lawbreakers, you know, people who do things illegally, you know, I like to. I'm a huge believer in capital punishment, because think about it. In a world where if you get caught stealing, you get your hand cut off, and you know this from the age of 3 or 4 until you're an adult. If you get caught stealing, they cut your hand off. That's what they used to do in the, overseas. Okay, you'd have a tendency not to steal stuff because of you getting caught. You get, that's something huge. All right, but here in the U.S., we don't do those kind of things. So people steal stuff, they get a slap in the wrist, they get free room and board for a couple of years, and okay, fine, then they're back out in the streets. Where is the punishment to fit the crime? In my humble opinion, I don't want to get into politics, but I'm saying Walgreens is having issues with a lot of criminal activity because they have a lot of underperforming stores. Specifically, those are being robbed because the administration doesn't want to prosecute theft under $900. All right, so anyway, let's stop with that and move on. So yeah, when she dropped here, I bought a bunch. Okay, not too much, because at $12, I can sell the 12 for 31 cents. Now, if I take the 7 cents I'm losing, because I'm buying it at 12.07, right? I'm buying it at 12.07, I'm selling it at 12. So I'm losing 7 cents right off the top. But here's the thing. I'm picking up 31 cents per share. I know it doesn't sound like a lot. 31 cents per share doesn't sound like a lot of money. But let's do the math. what is, well, first of all, it's 31 cents. You got to subtract the 7 from that, so that gives you 24. Okay, so I'm walking away with 24 cents per share on this deal. So I'm buying it for 12 bucks. I'm selling it for 12 bucks, and I'm collecting 24 cents for the week. Well, what the hell does that mean? Well, 24 cents on a $12 stock is 2%. And if I can do 2% every single week, that's over 100% per year. Now, I'm not looking for 2%. I'm looking for 1%, safe, predictable, consistent 1% per week. All right, that's over 50% per year. Now, this trading strategy, which was created for my 9-year-old daughter, only takes 10 minutes a day. And you know what? For a little bit of the evening, I am going to actually show you how I do it. And I'm not going to give a lot of commentary. I'm just going to blow right through it as if I wasn't trying to teach you guys. So I'm going to look at what I look at, and I'll just blurt it out barely, and then we'll go from there. And then you'll see how quickly it actually can be. Because most people like to make it more complicated than it needs to be. You guys always seem to forget. Now, we as adults, we like to complicate things because we're not used to having things being simple and easy. But this trading strategy was created for a 9-year-old. Simple, safe, predictable, consistent, no way to lose. That's what it was created for, those 5 criteria. Never buy something you don't want to hold long term. Never sell at a loss. Weekly options, 20 years of increased dividends, and make sure the numbers work. Well, the numbers work for me on Walgreens. Hey, Walgreens has been in business for over 100 years. There's a Walgreens in every major city in the United States. If I can buy it for $12.07, sell it for $12, collect 31 cents a share, okay, that's 2%. I'm perfectly okay with it. Now, here's my thing, okay? Number 1, I like Walgreens. Number 2, it's over 100 years old. Number 3, it's at $12.10 at the moment. It's never been this low. This is the low it has been in the last 7 years. Somebody told me that the other day. I really didn't check into it. I took him for his word because he's on here often, and he comes up with some good information every once in a while. So I take him for his word. Okay, so even if it wasn't, it's still the low of the year. Okay, if you're going to make money in the stock market, you buy low, you sell high. Do we know when the low is going to be? No, it just pops up. Well, there it is. It was Thursday. Now, could it go lower? Yes, it could. What are the odds and probabilities? Well, look at this big, huge space right here between the 1540, the 1560, and the 12. That's a big spread, and that's what they call a gap down. Now, gaps have a tendency to fill. So if this thing has a tendency to fill, it's going to go to the upside. Okay, fine. Great. So I like Walgreens, so I bought some Walgreens. Is what it is. Let's move on to the next one. Nike was another one. NKE. Now, I saw this one happen on Friday. So what did I do Friday afternoon before the market closed? Now, for those of you guys that don't know, okay, I have a trading group. We meet every morning, 9 a.m. until 10:30, somewhere in that area, whenever you guys are done asking questions. Because I'll sit there and ask questions all day long as somebody's there to ask questions. Okay, so at 3 o'clock, we're looking at the positions we picked up on Monday. So we pick up positions on Monday. Friday, well, we close out our positions to make sure we're profitable. Okay, great. So at 3 o'clock on Friday, I see this. And I said, Nike? Holy cow. So I bought a bunch of Nike also. Because look at it. 94 to 75. That is a huge drop. Okay? You think Nike's going to go away? No, Nike's not going to go away. Okay? They've been around for a while. All right, so where were we? So take a look at the numbers. 75.20. The 75s are going for $1.66. Okay? You take off the 20 cents, you're walking away with $1.46. Well, what's $1.46 on a $75 stock? That's almost 2%. So it's Nike. The question number 1, Hakuna, James, could your 9-year-old daughter do percentages that young? Well, yeah, it's really not that difficult. Okay, it was a little bit different strategy 15 years ago, but pretty much the same. Okay, so where were we? Oh, so anyway, Nike. I got no problem with Nike at 75. I don't. That's a question you need to ask yourself. Because remember, rule number 1, never buy something you don't want to own long term. Okay, the longest I've ever held anything was 9 months. Do I mind holding Nike for a long period of time? No. Why? Well, because they consistently pay a decent premium. Okay, if it doesn't hit 75, okay, right now it's at 75.37. Okay, the stock doesn't have to do jack or shit. Just stay exactly where it is. If it goes up, great, I make my money. If it stays exactly where it is, I'll make my money. The stock can even come down and I'll still make my 2%. Why? Well, because right now it's at 75.37. Okay, I'm buying it 75.20. I'm selling off the 75s, taking them in $1.66, so I make $1.40. Okay, $1.40 is just a smidge under 2%. But the stock doesn't have to do anything. But I'm okay with owning Nike. That's the question you need to ask yourself. Oh, fan went off. Hold on one second. I got my broadcast room almost set up perfectly. Okay, so, James, do you want to have Sharia laws in the U.S.? No, not at all. Okay, there's certain things. All right. Now, growing up, I grew up in the 60s and 70s. There's an interesting question. If I did something wrong, I got my ass whooped. Taught me not to do it again. Okay? Now, I got caught stealing. I got my ass whooped really good. It taught me not to do it again. Okay? Now, if we do not teach our children not to do certain stuff, well, they're going to have teenagers, we're going to have young adults, and then we're going to have men doing bad crap. Let's not get into that. Okay? All right, so let's go into some of these questions and we'll move it along. What's up? Feeling better? Okay. Everyone concerned? Yep. What do you think about AGNC? We went over that. Jimmy, American Airlines. $11.33. 11.31. Yeah, those numbers don't look good at all. All right, so Jimmy, sorry about that. Take a look at the numbers. 11.31. The 11.50s are going for 9 cents. That's not worth it. Okay, but if you really like it, you know, fine dandy. But look at where she is. Well, it's not bad if you think about it. Last 30 days. Okay, take a look at the last 30 days. Actually, Jimmy, if you like American Airlines, take a look. 11.31, right? The 11.50s are going for 9 cents. Now, 9 cents is not quite 1% of 11.50. Let's find out exactly what it is. Clear, 0.09, because that's 9 cents. And what we buy in the stock for? 11.31 divided by 11.31. And that comes to a grand total of almost 0.8. Okay, so 0.8, multiply that by 52. If you average it out, that's 41% for the year. That's not that bad. But the question is, do you like American Airlines? Okay, so if you like American Airlines, check this out. 30 days ago, here's the 30-day high, 12.10. And then she drops Wednesday. Wednesday is the 30-day bottom. And then you have 2 days to the upside, Thursday, Friday. That's like a red carpet for me. Okay? I love 30-day bottoms bouncing off of a 30-day top. 30-day top, 30-day bottom, 2 days to the upside. Great. Okay, if I jump in now, I'm perfectly happy with American Airlines. I got this hair that just won't get out of my face. Anyway, so yeah, Jimmy, I like it. I would prefer it to give me more than 1%, but if you really like American Airlines, that's the number one question. Do you like the company? And if you can get, 0.7 or 0.8% every week, that's 40% per year. That's really not that bad. Okay, it's a lot better than anything else I've seen out there. So pick a good company. If you like American Airlines, great. They've been around for a long time. All right. I do. Johnson & Johnson, cool beans. Yeah, I missed a lot of these questions. They just keep going out. Honeywell. Oh, wow. Wow, did I lose? I missed a whole bunch. Uh-oh. All right, hold up, guys. I'm missing a whole bunch of these questions. I look better. Yep. Wheelchair. Okay. Sorry about that wheelchair component. Everyone's concerned about. Yep. Got that one. AGNC. Already looked at that one. American Airlines. We looked at that. YouTube sounds great. Nice haircut. It's not a haircut. I just got out of the shower because I mowed the lawn and then I didn't want to be all sweaty because it's just like sticky. So I just jumped in the shower real quick before jumping in. Kilroy. Tukey. I got to know what the ticker symbol is. You sell covered calls, meow, meow. All right, yeah, I do covered calls. I love covered calls. It's one of the safest trading strategies there is. Okay, Jimmy, you really want to join the trade group? DM me with your number. I'll give you a buzz. Let's see if you fit in. Okay, it's really that simple. Send me your number. I will personally give you a call, and then we will go from there. Okay? But if you really want to join, you can join it right from the website. Now, the website is being redone at this moment, so it might be a little... Cool, am I in the t-shirt business now? No. It's just somebody thought it would be cool if I had t-shirts. And what do I usually say? Ooh. I usually say my phone just fell. Hold that thought. Facebook wanted to take a nosedive. Okay. All right, there we go. All right, it's not as good as it was, but it has a slow collection. Yeah, so anyway, yeah, I might think about selling the t-shirts on my thingy. Okay, so I do cover calls. How do I join the group? Yeah, it's on Patreon, The 10-Minute Trader. You'll see my pretty little face. Yeah, it's there. All right, Ben, you're new here. Okay, because I remember a name like that, FCNCA. I never heard of it, FCNCA. FCNCA. That's going to be a no for a couple of reasons. Would you like to hear the couple of reasons, Ben? Reason number one. 1,683. That's reason number one. Reason number two, it's a monthly stock. Monthly options. Monthly options just don't pay for me. Okay, now when I say 20 years of increased dividends and weekly options, apparently you weren't paying attention. This is monthly options, not weekly options. I don't do weekly options. They just don't pay the same amount of money. So if they don't pay the same amount of money, why would I bother with them? But that's me. If you want to do it, perfectly fine. I don't tell people what to do and what not to do. What were you thinking? Hello from Jennifer. Yeah, I like saying that. Hell no. What were you thinking? Think about it. Okay, so perfect example. Ben likes that company, FCNCA. Now, not a lot of people can afford a $1,600 per share company. I know I can't. Well, I could, but I'm not going to. Because I like to buy in 1,000 share increments. It allows me to sell 10 contracts. So if I buy 1,000 shares of AT&T, I can sell 10 contracts against it. It makes the math easy. It makes everything simple. Okay, so let's go some more questions. Sorry about that, Ben. Just a no. Okay, wheelchair, you like that one. Covered calls, meow, you like that. Jimmy, NSC. Really, NSC. Jimmy, you want to do this again? Take that chance. Ooh, here we go. 214. Norfolk Southern Company. Okay, it has weeklies. It's 214. Okay, let's see how often they have increased their dividends because I've never heard of them. NSC. Okay, they do have dividends. Cool. Nice. Whoa. Am I looking at this right? Holy cow, from 1982. Okay, so I know that's over 25 years because I graduated in 82. So look at this. Look at the dividends. 82, 8, 9, 10. Okay, they don't do it every year. Okay, they don't increase every single year. That I dislike. However, they do increase quite often. 90, 88, 89, 90, 91, 92, 93. Still going up. 94, 95, 96. Ooh, this doesn't look good here. 97, 20 cents a share. 98, 20 cents a share. 99, 20. Oh, come on. So you look at that, Jimmy. We were doing so well right up until 2000. Look at this. Okay, they paid 20 cents a share for like 4 years. Okay, I can cut them a little bit of slack, but they went from 20 cents a share down to 6 cents a share. That doesn't make me a happy camper. But that was in 2020. Okay, now, well, from 2020 to where we are now, which is another 24 years, so it might be able to let it slide. So from 2001, okay, 6, then it's up to 7, then to 8, then to 10, to 11, 13, 22, 29, 32, 34, 40, 47, 50, 52, 54, 57, 59. Okay, stuck at 59 for a couple of years. 61, 72, 84, 94, 99, 102. Ooh, I kind of like this one. Jimmy, that's a good pick. Okay, so let's take a look at the numbers. Now, doesn't have. What the hell was that? Oh, my lights went out. That was weird. Lights just went out for no reason. Okay, that can actually be a good business, print on demand and no inventory. Yeah, and that's not actually what I'm thinking about Hakuna. I just thought, it was kind of cool saying, people like to belong to, same like-minded people. Like, oh, that's a no. All right, so anyway, NSC, it has 20 year, almost 20 years of increased dividend. Wait a minute, 20, yeah, it has 20 years of increased dividends, but not consecutively, okay? But, okay, so they may not do it every single year, but it's pretty close to every year. All right, so let's take a look at the numbers. First of all, wow, that's going to be hard as hell to figure that one out. Now, we'll figure it out, okay, but let me tell you what I'm talking about. The last trade right here, 214.69. The bid, 182.75. Really? 235? Really? That's a big ass spread. How am I supposed to figure out these numbers? So what I'm going to do is I'm going to go off of the last trade. So the 215s are going for 205, between 205 and 235. So you might be able to get your 1% here, because the spread, the bid and the ask, they're so far skewed. When the market opens first thing Monday, these numbers will tighten up. Usually it's like a 1 or 2 cent spread between the bid and the ask. Here it's like freaking ridiculous. That's like $60 spread. That's crazy. All right. So anyway, at the 215, you might be able to get your 1%. Great, fine. Let's take a look at the numbers and see what they look like. All right. First, I know it's not your strategy, but selling out of the money can give you both returns on the shares and on the premium. Yeah, Hakuna, I get that. All right, but if you're at the money, okay, at the money you're getting your 1%. That's my main focus. Okay, that's my main focus. Acorn, how are you doing? Okay, so if I'm doing at the money, yeah, I'm getting close to 1%. If I'm going one strike out of the money, look, I'm down at 110. That's a 0.5%. Okay, so you're asking me to get a 0.5% return, all right, which is 25% per year, and then maybe an additional $2.50 if this is the big if the stock goes up. Okay, that's not a game that I want to play. Okay, the game that I want to play, I want to get in, get my 1%. Say thank you kindly, bow out, and do it all again next week. Okay, I'm really not looking for stock appreciation. I'm looking to buy it at 235, sell it at 235, walk away with 1%, and be perfectly fine. But when I do that, I want to make sure it's in an upward trend. Let's take a look at what she's doing the last 30 days. So, a year ago today, we're at 224. It bottomed out at 182.75, and that was the end of October. Okay, so the second week in March was the top at 263. Now from the top, it just drops all the way down. Last 30 days, check this out. Here we are with the last 30 days. And this, Jimmy, this one actually looks pretty good. Check this out. Last 30 days, we're right here. Okay, 220. She shoots up, pulls back, shoots up, tops out at almost 230. Pulls back, tops out again. See how, when I say it challenges the 30-day high, look, here's your 30-day high. She drops, goes back up, and it challenges that 30-day high, but doesn't quite make it. So she drops. Look at that big drop. Okay? Almost at 207. Okay, and then she goes up, pulls back, and then it's back up again. I would like one more day to the upside, because this gap right here, that gap is going to fill. Okay, and she's going to go back to the upside. So that's actually a pretty good play there, Jim. But you have to ask yourself the question, do you like NSC? Now, I've never heard of them, so I have not done my due diligence on NSC. Okay, so I personally am going to write it down and take a deeper look into NSC. See if it's worthy of making my list. Okay, even though it's just barely. You know, here's an idea. Let's find out when does NSC pay its dividend. May. Ugh. So it pays its dividend May, so next time it's going to pay May is August. The first week of August. Cool. So what I'm going to do first week in August. Okay, so how far away is that? 1, 2, 3 weeks away. Ooh. So I'm going to put it into my little book here to take a look at NSC in 3 weeks. Okay, because they have a dividend coming up. Now, Jimmy, if you didn't know this because you're new here, is I like to buy stocks 2 weeks prior to the EX date. The EX date just so happens to be this little green dot here, where it said, this is August of last year, because apparently they don't have August of 24s already listed. Okay, so they usually do it at the same time every year. So the first week in August, I would like to buy it. Okay, here's the first week in August right here, the smaller screen. Okay, which would be the week of the 17th of July. Okay, so next week is the first week of July, second week, third week of July. So I want to take a look at the third week of July and see what the numbers look like. Because to me, it just kind of makes sense. Because the way the chart is reading, look at the chart. She goes up, there's your 30-day high. Pullback, challenges that 30-day high, drops, finds the 30-day bottom, and now she's going to the upside. Okay, so that's a good opportunity to jump in on Monday, if you like it. However, they don't have the dividends for another month. Okay, so you're aware of that. Okay, otherwise you might be sitting with the shares if you do it out of the money. Yeah, see, Hakuna, I don't like doing I would prefer to go deeper in the money and get a lesser percentage than going out of the money and have to rely on the stock moving up. Because if I had it my way, I'd have the odds and probabilities in my favor, which means if I see the stock coming down, okay, and it has its dividend coming up in 2 weeks, well, that's the dividend coming up, and it's at a bottom. Best time to buy is at the bottom, okay, because you buy low and you sell high. Okay, so if I'm buying here, see that? 2 days to the upside, even though Thursday was a down day, okay, it's still higher than the 30-day bottom, okay? A higher high and a higher low, okay? So was Friday. So Monday, perfect opportunity for this stock if they had the dividend a couple of weeks out rather than 4 weeks out. Alrighty? All right, so what we have next? Oh, waste management. Waste management. Really, Grun? G-Nun. G-Nunno. WM. Whoops. I like waste management. It is on my list. Not today, it ain't. Do you see this right here? Don't even have to look at the numbers. Look at this. Okay, that is primed for profit taking. Okay? Primed for profit taking. Recon, DVN, huh? Amazon should buy Walgreens. Maybe they should. Or you're only going to do it twice. Oh, I'm missing something. Oh, it's right. I'm missing a lot of these questions. I'm sorry, you guys. I'm missing these questions. Thank you for your commitment. All right. That Cobbler? Cobbler 21. Talk with Kamala. Oh, boy. Yeah, don't get me started. But they chose to do it. Money is money. Yep, that's correct. Also, known as wheel strategy. Yeah, I don't... Okay, exposing furrows, the wheel strategy is not as easy as you think it is. Okay? The strategy I create... All right. The wheel strategy, basically, all right, you're taking a big fat chunk of money and you're putting it aside and you're collecting a premium off of it. Okay? But you're doing it with a put option. Great. After that put option is exercised, now you're in a position. Still have a big chunk of money set aside. Now, big chunk of money set aside is into a call option, selling somebody the right to buy it from you for basically the same price you just paid for it. Isn't that exactly what I just said? But you're adding another week because you're doing it a week before time, and then you're doing it all over again. So you're doing basically the same thing, but you're adding another step. Okay, now when it was created for a 9-year-old, it was challenging enough to get her to understand what I was talking about. Now you want me to put options in there also? No, it just didn't work. Okay, simple, safe, predictable, consistent, and no way to lose. Okay, 5 rules. Never buy something you don't want to hold long term. I love waste management, really do, but I don't like it at the high of the year. Okay, I don't. Now, I don't do puts. This is a perfect opportunity to get a put. Look at it. Okay, here's your 30-day bottom right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 days to the upside. You honestly think there's not going to be some profit taking next week or the week after? Okay? Okay, exposing furrows? Furrows. All right, whatever. Honeywell. Now, I've heard of Honeywell, but I don't think I've ever traded Honeywell. What is the ticker symbol for Honeywell? Start with selling a put. Yeah, expose first. I know exactly what it is. If you get a sign, then you sell a call against a share. Yeah, I get that. But I don't like it because it adds more steps, and you're doing the exact same thing. All right, cash secured puts, you're taking a chunk of money, putting it aside, collecting a premium against it. Covered call, big chunk of money, putting it aside, collecting a premium against it. Explain to me the difference other than adding another step. Now you got to figure out, okay, and where's it going to be in 1 week? Nope, now I got to figure out where's it going to be in 2 weeks. Yeah, no thanks. I like simple. Sorry. Sherry, you like Wally World. All right, WMT. Wally World. Wally World at 67.73. Check it out. 67.73. I'd be looking at 68. So 68's going for 32 cents. That's 0.5%. And look at where it is. Way too high. Not that it's too high in dollar-wise. It's too high in the chart. Look at it. Okay, she's going sideways here between 51 and 55 for almost half of the year. Okay, see that right there for half of the year. Then she shoots up, and she's going between 58 and 61 for, what is that, February, March, April, May? Okay, now she's shooting up. Yeah, no thanks. Because here to here, okay, with the last channel, that's still a big profit potential. Yeah, no thanks. I don't like the way it looks. Okay, I don't like buying at the high, hoping it's going to go higher. There's 9,557 stocks. Now, we checked a couple of weeks ago. 9,557 stocks. Why would I pick one that looks like it's at a high and might come down? No, I would prefer to find one that looked something like this. Well, no, not that. How's that? That looks better. Because look, she goes down, she goes up. She goes down, up, 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 down, up. Where do you think she's going? Well, she's going to be going up next. Okay? So the chart will tell you or give you some kind of idea of where it's going. So why would I do something when I can plainly see it's at the high? Because you make money when you buy low, sell high. Not when you buy high and sell higher, because higher may never come. Okay, Recon. 3 decent companies. Alcoa, FCX, and Mosaic. Interesting. Alcoa. 39.80, the 40s. Ooh, check out that number right there. Okay, now we all know who Alcoa is. They've been in business for over 100 years. Okay, so we know that they must be doing something right. So if they're doing something right, then I lean towards putting my money in a company that's consistently profitable. Okay, great. So 39.80 is what I can buy it for on Monday. The $40 call strike is going for 69 cents. Well, 69 cents on a $40 stock, and it's at 39.80, which is an additional 20 cents that I can get on top of that if it hits 40 or above. Okay? Now, I could go for the 39.50s because that would still give me 1%, and the stock doesn't have to do anything. Okay, when I say it's all about the numbers, look at the 39.50. It's giving 94 cents. Well, how do you figure out what you're going to get? Well, you take the 39.50, which is the strike price, and you add this to it. So what is 39.50 and 94? Well, that's 40.54. Okay? So 40.54 subtracted by not 39.80, that's well over 1%. I would prefer to do this one right here because it's in the money. The stock doesn't have to do a damn thing. Okay? But what is the chart telling me? Because that's the important part. Yeah, the numbers work. I prefer the 49.50, but the 40 works also. And so doesn't the 40.50. Okay? So 1, 2, 3 of them work. The 39, oh hell, that almost works too. Neat. But you do the numbers. Remember when I say never buy something you don't want to hold long term, never sell at a loss, weekly 20 years of increased dividends, weekly options, and make sure the numbers work. That's rule number 5, the numbers. What am I buying it for? What am I selling it for? Well, each one of these, the 39, 39.50, the 40, and the 40.50, all work over 1%. Great. That's what's the chart telling me. Now, there's 5 things. Remember I told you there's going to be a lot of 5s? There's 5 things you want to look at on a chart. Number 1, the high. Okay? Number 2, the low. Number 3, where was it a year ago? Number 4, where is it now? Number 5, which direction is it going? So we go from where it was a year ago and you connect to where it is now. Okay? That's the direction it's going for this 12-month period. Okay? Because another 6 months, that's going to change. Because 12 months ago is here, and yesterday is here. Okay, that's the direction it's going, to the upside. Great, it's an upward trend. I like that. Okay, so let's dig in a bit deeper. The last 90 days. Now the last 90 days is the last 3 months. Okay, 5 things. The high, the low, where was it, where is it, and which direction is it going? Okay, that's the 5 things. Okay, so I like the 1-year chart. I like the 90-day chart. Now I want to take a look at the 30-day chart. But when I'm looking at the 90 days, what am I looking for? I want to see if there's any pattern. And there doesn't seem to be one. Okay? And she goes up, sideways, down, up, down a little bit. She should be going to the upside from what it looks like on the 90-day chart. But that's not the important one. The important one is the 30-day chart. Okay, the 30-day chart kind of like really brings you close to see what's actually going on. Okay, because the buyers and sellers, that's you and me, have an idea of what we like and what we dislike. Okay, so 30 days ago, here we are, right around 43. She goes to a high, at, was that 46? And then drops. Look at the 30-day bottom. I love it, 30-day top to a 30-day bottom. 2 days to the upside, you jump in. Now when I say 2 days to the upside, here's your 2 days to the upside. Okay, jump in here, and then it goes up, and that's more than 1%. Well, that's what I like, more than 1%. Goes up there, pulls back, and right here, that's the upside. So she went up, pulled back, made a new bottom here, not a 30-day bottom, but it's still a bottom. Okay, there's profit taking. Now she may or may not go up. That will be Monday. Okay, if she opens up higher, great. That's an opportunity to jump in. If she opens lower, then I want to wait for another bottom, because it looks like it could be the bottom for Thursday. Could be. I like me personally, 2 days to the upside. Is this 2 days to the upside? No, it's only 1 day. But I like the numbers. Take a look at the numbers. 39.80, the 40, the 39.50s. All these numbers look good. But it's all going to depend on what she opens up on Monday. And then you got to ask yourself that all-important question. Do I like Alcoa? Okay? So ask the question, do I like Alcoa? And do I mind holding on to it for a long period of time if I have to? All right? So those are the interesting questions. All right, so FCX. Now I actually jumped into FCX, and I'll show you why and where I jump into FCX. But first thing I want to check out, 48.60. That means I want to look at the 49s. The 49s are going for 58. Well, simple math, that's more than 1%. Okay, you want to figure out simple math? Here you go. $48.60. You take a decimal point, move it up 2 spaces. 48 cents is 1% of a $48 stock. 58 cents, well, that's more than 1%. It's actually that simple. But I want to see what the numbers say. 5 things, ready? High, low, where was it, where is it, what direction it's going. It takes less than 3 seconds to figure that out. I mean, seriously, think about it. Well, where's the high? Oh, it's right there. Where's the low? Oh, right there. Where was it a year ago? Oh, right there. Where is it now? Oh, right there. What direction is it going? That takes a little bit longer because you're going to go from here to there. Okay, it's in an upward trend. 5 things takes less than 3 or 4 seconds to figure it out. I mean, seriously, ask yourself the question. I'm taking a look. Oh, there's the high. You really can't mix that up. That's the high, that's the low, that's where it was, this is where it is. It's really not that difficult. Don't make it more confusing than it needs to be. Okay, so I like where it is. Let's look at the last 90 days. Okay, 5 again. Okay, high, low, where was it? Where is it? What direction it's going? You can definitely see a pattern here. You ready? Up, down, up, down, up, down, up, down, up, down, up, down. 1 day to the upside. See that right there? We're going to zoom in a little bit closer. You'll see it a lot better. Okay, see it? 30 days ago, way up here, she drops, recovers, drops, recovers, drops, recovers, drops. Here's your bottom. Here's 1 day to the upside. I like to have one more day before I jumped in, but I'm already in it. Now, if you look here, okay, 30-day high, previous 30-day low. Here's where we ended up on Friday, right here. So yeah, that looked awesome to me. So I jumped in on Monday. Okay, it went up, and then she pulled back. Okay, so I already own it at 49.76, which I don't mind, because I can sell the 49.50s and make just a smidge under 1%. Is what it is. All right, MOS. Mosaic, 28.95. The 29s, 31. That's over 1%. This is another good one there, Recon. Recon? Is it Recon or Reckon? Reckon? Recon. Okay, Recon. That's 3 good ones in a row, dude. Way to go. Here, look at it. The high, the low, where was it? Where is it? What direction is it going? Now, this one's in a downward trend. Do I like it? Well, hell yeah, I do. The reason why do I like it? Well, I like it because the best time to buy a stock is at the bottom. And, well, it's pretty damn close to the bottom. But let's take a close look at the last 30 days because that gives us an idea. I mean, don't get me wrong. A year ago, total different world than where we are now. Not hugely, but you know what I mean. Because this is what we're thinking. I just want, 5 days at a time. Because I'm only interested in buying it on Monday and getting out on Friday. I just want to know where it is going to be in the next 5 days. And am I okay with owning it? Well, I have no problem with Mosaic. Mosaic's been around for over 100 years. So it's definitely a yes. Only sell options on stocks you want to own long term. Exposing Forest. That's right. I couldn't agree with you more. Do you like that one? Yeah, that's right. Only sell options on stocks you want to hold long term. So if you take a look at all the 9,500, you know what? Let's do it again. Just for the fun of it. Just for the hell of it. Let's figure it out. Because every week they change. FinViz Stock Screener. Now, for those of you who don't know who FinViz Stock Screener is, it's a financial visualization company, and they do quite well for themselves. But check that out. And the number did change again. Okay, so what do I like about this website? Well, what I like about this website, it tells me how many stocks are available. Look at that, 9,564. Every week they add more and more and more. Okay, so 9,564 companies. Well, that's a lot to choose from. Let me show you how I quickly get rid of most of them. Okay, right here, a dividend yield. A dividend is nothing more than the company sharing their profits. If the company's going to share their profits, well, they're going to pay a dividend. If they don't pay a dividend, well, they're not going to share the profits. They put the money back into the company for capital growth. If you're looking for capital growth, you're in the wrong place. That's not what I'm looking for. I'm looking for a safe, predictable, consistent 1% per week, and I get that from companies that share their profits. Why? Because companies that share the profits have a tendency to be more stable. And if they've been sharing their profits for 20 years or more, well, it tells me that they've been profitable for more than 20 years, which might be time for a haircut again. My goodness. All right, so I have to go here, click on a yield, let's say 3% yield. Okay, now we're looking at 2,604 companies. Okay, great. Now, how do I choose from all of them? Well, I want to look at options because I want weekly cash flow. So the companies have to have options available. Now, this website doesn't distinguish the difference between weekly options and monthly option, but it does break down the list to 1,481 companies. So let's get out of there. Let's go back to here. All right, so 9,000. So we're going to remember this number. 9,564 companies. Now, I only look at less than 300 because there's about 300 companies that consistently increase their dividends every single year. Oh, really? What do I think about SPY? Will we gap down to 540? I don't do spiders. Sorry. And I'm missing, I'm missing a whole bunch more questions. $1.40 per quarter. Trippy, I have no idea what he's talking about. PNR, never heard of PNR. Recon, whoops. How do you get 2%? Easy E Tool Talk. Ooh, okay. Sherry, do you have more than one account? Someone messaged me last night and they said they were you. Ooh, Sherry. Great observation. Now, to be 100% honest with all you guys, I have one and only one TikTok account. There are, last I checked, 24. We found a couple more this week. 24 people just on TikTok alone pretending to be me. So if you get a message from someone saying that they're me, okay, what I always tell people, and I'm going to tell you right now, you really want to talk to me? This is your money. It should be really important to you. Important enough to you for you to send me your email, not your email, send me your phone number. I will actually give you a call. Now, if you think you're going to put your phone number in, I'm not going to call you. Yeah, you're sadly mistaken. I will call. I will. I called some guy at 1 o'clock in the morning. Well, because he was up and he told me to. Well, hell yeah, I'll call him. Okay. Easy tool. How do you get, all right, let me get out of here. Let's get back to where we were. Yeah, so Sherry, and for the rest of you guys, be leery because there are a lot of people out there pretending to be me. Okay, I talked to a guy who got suckered into, I think, was it $350? He lost $300, and then another guy who lost like 5,000. I was like, holy shit, what are you kidding me? All right. If they go bankrupt, you lose. Yeah, I get that. Okay, why would you invest in a company that go bankrupt? Okay, so let's go back. Easy tool, get 2%. All right, let me see if I can explain this to you in a manner that you'll understand it. Which one were we talking about that was going to get 2%? I forget. No, I don't. Hold on a second. Was it Macy's? No, we didn't even look at Macy's today. 1950? No, that wasn't it. WBA, was that it? 12. Yeah, okay. All right, so Easy E tool talk. Okay, you ready for this? See if you get your math. Okay, everyone should know math, especially if you have a business, which sounds like you have a business. Easy E tool talk. So it sounds like you have a business. Okay, so here's the thing. If I'm buying Walgreens, and the Walgreens has been in business for over 100 years, I don't think they're going bankrupt anytime soon. Yeah, they're having issues, so they're going to close a bunch of the stores, which only makes sense if the store's not producing and you're losing money. Of course, you close it. You get rid of the dead weight, and you put your money back into, the corporation and building a stronger company. Okay, so hypothetically speaking, okay, now I already own some Walgreens, so I'm just saying for people who want to. Okay, now let's isolate this right here so you know why I'm looking at this. Okay, this big huge gap here. Gaps have a tendency to fill. What does that mean? If she gaps down from 1560, that's where she was on Wednesday. Thursday she dropped down to 1250. Okay, lost a few dollars. Eventually, this stock should go back up and fill this gap. Okay, so let me see if I can find a position where it actually did it before. Not on that one. Oh, I know a good one. You'll be able to see. I know this one because I lived through this one. All right. Now, okay, here's one right here. Gap ups, gap downs, they don't have to fill, but gap ups usually do. Whoops. Okay, so this is target. Okay, you see this big gap from 156 all the way down to 140? That's a $16 drop. See it? 156, the bottom of 140, that's $16. A couple of weeks later, look, that gap filled. Does it happen all the time? No, but it happens enough that you can set your clock by it most of the time. Now, does that mean Walgreens is going to fill in the next week or so? Does not mean that at all. Okay? All it means is that eventually, okay, because the stock hasn't been this low in 7 years, eventually this should fill. Okay, so if I like Walgreens, that's number one. Number two, if I buy it at $12.07, do you see that number right here? Now, if you're new here and you don't know this, this screen behind me, this screen here is live on YouTube, The 10-Minute Trader. Okay, if you ever seen any of my videos, hey, this is James from Dividend Stock Talk, brought to you by The 10-Minute Trader, okay? The10minutetrader.com or The 10-Minute Trader on YouTube, The 10-Minute Trader on Facebook, The 10-Minute Trader, on all that social media site. Okay, so if I'm buying it $12.07, okay? Once I buy it first thing Monday morning, if I so desire to, I'm not going to because I already own it. No sense buying more. All right, $12.07. if I do a covered call. Now, a covered call is when I own the stock and I sell some of the rights. The rights, not the obligation. Puts are obligations. Rights are options. You know, hey, I can do it if I want. I don't have to if I don't want to. But a put option means if I have to, because it's a contract. These are option contracts. Okay, these over here are calls. These over here are puts. I don't like puts. I don't do them. That's me. If you want to do them, perfectly fine. Okay, but I don't. I like to keep things simple, safe, predictable, and positive. Okay, so if I buy it at $12, I sell some of the rights to buy it from me at $12. That's almost the same price I just paid for it. But I paid $12.07. I'm selling it for $12. Well, I lose 7 cents. Well, yeah, okay. But what am I collecting as a premium? Now, my premium I'm collecting is 31 cents. Okay, so 31 cents minus 7 is 24. Now, 24 cents on a $12 stock is 2%. That's where the 2% comes from in this particular situation. Does it happen every single time? No, it does not. I think the most I've ever gotten in 1 week, I think, was 6%, and that was nuts. It's like, cool, I'll take it. WBM not going bankrupt. Okay, I have no idea who WBM is. WBA, okay. PNR, I have no idea who PNR is. Public News Radio, Pentier, that's a no. Simple, quick, no. It's a monthly. Monthlies just don't pay enough. There's only 12 months in a year, which means you can only do it 12 times. Now, there's 52 weeks in a year. Now, I didn't go to college, okay? I'm not a math professor, but I do know 52 is better than 12. If I'm getting 1% every week, that's 50% per year. If I'm getting 1% per month, okay? Or even if I'm getting 2% per month, that's still between 12 and 24% per year. No, I would prefer 1% per week. And it's only 10 minutes a day. It's really not that big a deal. Okay, most people spend more time planning the family barbecues or a weekend getaway. More time than they spent on their personal finances. Okay, now when you reach retirement age, you're going to reach it whether you want to or not, whether you like to admit it or not. And there's only 3 ways you're going to reach it. You're either age out, where they tell you you're too old, don't bother coming to work again. Number 2, you walk out and you say, hey, I have enough money, I don't need your BS anymore. Or number 3, they carry your corpse out. That's it. 3 ways you're going to retire. You walk out, you age out, or you get carried out. But it's going to happen to everyone eventually. All right? Now you have the camera different on VS TikTok. T-shirt married here. But it's correct on TikTok. Yeah, I figured that much. It's a higher crowd on TikTok, so I figured, you know, hey, if I'm going to do the T-shirt, I might as well make it look good. JC! Uh-oh, I heard JC. I thought maybe
You're not calling me in there to say hi. I'm feeding the dogs.
Okay. I just thought I'd ask.
Hi.
All right, she said hi. But she's not, she's a little camera shy tonight. But that's okay. All right, so PNR is a no. Sorry. $1.40 per quarter. Okay, trippy crap. I have no idea what you're talking about, but okay. What do you think MSM is going to do? Up or down? MSM? Mo? MSM. Don't know, don't care. It's a no. Sorry. DLTR. DLTR. Dollar Tree, ooh, I seriously doubt Dollar Tree has 20 years of increased dividends, but let's take a gander at it. DLTR. Sorry, DLTR is a no. Sorry, Jimmy. Now, Jimmy, you had a couple of good ones. Don't throw some bad crap at me, brother. Okay, Jessica King, nice to see you again. I could use a list of stocks under 20 bucks. That's a yes. It's been a tough search. I've got Ford and Macy's. Jessica, I'm going to do you a favor. You ready? You ready, Jess? Get your screensaver. All right. Siri, SIRI, NOK, GNW, KGC, AGNC, HLF, NUS, VALE, GTF, PBR, CLF, NOV, NLY, T, and Macy's, M. Okay, that's that list. NOK, GNW, KJC, AGNC, HLF, NUS, VALE, GT, FPBR, CLF, NOV, NLY, TM. Okay, that's that list. Yeah, this one's just way too many to label. Sorry, kiddo. Look at them all. There is a whole bunch of companies. Alrighty. Hope that helped you out there, Jess. Hope you got your screensaver working for you. Jimmy, I do. All right, Richard, Johnson & Johnson, great company, over 100 years old. Big old dividend king. However, 146.28 to 147 is going for 62, not even 0.5%. Some of the big companies, I mean, talking the big companies, pay crappy premiums. Okay, Coca-Cola, Pepsi, Johnson & Johnson. There's a few of them. AT&T, that's another one. Okay, so yeah, so there we go. What do I think of BE? Tyson, you really want to throw something at me I've never heard of? Bloom Energy. No. That's a no. Oh, look at that. That's a no. Why is it a no? It's a monthly. Okay, if you don't understand what I mean by monthlies just don't pay, okay, so what we're doing here is dividend investing for weekly cash flow. Weekly cash flow. Monthly options, you can't do it with monthly options. You can only do it with weekly options. Okay, so let's give you a quick little synopsis, little scenario here. Okay, $12.40. Okay, so if I buy it at $12.40, sell somebody the rights for me to buy it from me at 12, well, I'm collecting 75 cents a share. You think that sounds like a lot? Well, maybe it is, but here's the thing. You're losing 40 cents right off the top. Okay, you take 40 cents off of this, so you're walking away with 35 cents. Okay, 35 cents divided by 12. Okay, that's 3%. Okay, clear. 0.35 divided by 12 comes to a grand total of 2.9%. Now, that's for 3 weeks. So now I got to divide that by 3 weeks. Divide that by 3 comes to a grand total of 0.9. Okay, great. That's not actually that bad. All right, but here's the thing. This is why I don't like it, okay? Number one, you see where it's going to the downside? All right, so if I buy the option, all right, and I sell it and I get my 3%, which is not bad. 3% is not bad for a monthly. Where is it going to be in 3 weeks? Okay, so here's 3 weeks ago, right here. It's at 15. Now it's at 12. Okay, so I can get a good idea where it's going to be in the next 5 days, which is 1 week. Okay, 29, right there, 29. Okay, here's your 30-day high. Here's your 30-day bottom. We don't even know if it's hit the bottom yet because it hasn't. Okay, 30-day bottom was Friday. So tomorrow or Monday could be down, could be up. We just don't know. And then I've got to figure out where it's going to be in the next 3 weeks. Yeah, no thanks. Very rarely do I ever see something paying out 3% on a monthly. But here's one right here. Okay? But where's it going to be in 3 weeks? Okay, it's at 12 right now. What does the stock normally do this time of year? For that, we use the seasonality chart, which is, I can't believe this is the first time we're pulling out tonight. Okay, this is where we are right now, Bloom Energy. Okay, the blue line represents where we are now, that's this year. The red line represents 10 years worth of data, that's 2014, 15, 16, 17, 18, 19, 20, so on and so forth, 10 years. 10 years of data. Where's it going to go? Well, it looks like it's going slightly to the upside, but it's kind of choppy. Look at it, all over the place. So where's it going to go in the next 3 weeks? I don't know. I just don't like weeklies. I've never seen a decent weekly. And then trying to figure out, I have a difficult time trying to figure out what's going to be in 5 to 10 days. You want me to figure out 3 to 4 weeks? Yeah, no thanks. And then if I miss my target, on the 19th of July, well, guess what? I have to wait until the 16th of August, which is another 4 weeks out. And will I get 4% that week? No. Now, don't get me wrong, you could do very nicely with monthly options, if you're okay with that. I don't like monthlies because, you know what, it's my money and I like to I'm retired, so I have the time to do it. And it's only 10 or 15 minutes a day. So it doesn't bother me 10 or 15 minutes a day. Just like, hey, where's my position right now? Where do I think it's going to go? Okay? Okay, what do I think about BE? So Tyson, that's my take on BE. Normally I wouldn't do it, but wait a second. Before we even go further with BE, let's quickly check. What does BE pay for dividends and how consistent are they? Oh, hell, we just wasted all our time and BE doesn't even have dividends. Hell no. That's a no there, Tyson. Sorry. I went through all that example and it doesn't even have dividends. Come on, guys. Dividend investing for cash, weekly cash flow. This company doesn't even have dividends. Why are we even looking at it? All right, next. Sorry, Tyson, that's my opinion. No dividends, no do. All right. I can fix that. Hey, you're back again. Scroll to the bottom. Yeah, I'm getting, holy shit, 67 messages. I'm getting there. Audio on YouTube is muffled. Yeah, my what do you call it, wasn't working. Let's see if we can get them to work now, because I plugged this thing in. Give me a second. Okay, that's plugged in. This is turned on. Turn me on. Okay, all right, that's that. Let's go back here. Let's see if we can get rid of that audio. Are you sure to remove the audio? Yes, I do. Let's put a new audio there. Audio input. Okay. Default. Here we go. Here we go, loop-de-loo. Here we go, loop-de-loo. Yeah, it's working now. So I just had to change. Okay, I had to charge something. Okay, neato. All right, so let's keep going. Holy cow, 69 messages. Let's get back to this. Okay, is that group the subscription? I really think I'm waiting to do that. Oh, Angel, not a problem. Okay, it is a subscription, yeah. Careful with Facebook, very slow moving. Yes, I know that. What do you think, MSM? We already looked at that. So what's going on here with the trades a lot? Okay, book, I have no idea what you mean by that. What do you think about SPY? Well, I don't do spiders at all. Okay, they don't pay dividends. Do you receive dividends on the same stocks? I don't receive as much dividends as you think. Renee, how are you doing? And Lenore, how are you doing too? Warren Buffett owns it. All right, Trucker Scott. Hey, Trucker Scott, how you doing? Trucker Scott, I have no idea which one you're talking about. Love the shirt. Hey, 86. What stock is this? Oh, this is BE. Yeah, we're not going to do that one. Tony Hawk, can you be my financial advisor? Sure, why not? I'm not a financial advisor. I'm new here. What do you think about itch? Never. Oh, INTC. Because it looks like it says itch. It's Intel. INTC. I like INTC. INTC. 30.96. So I'm looking at the 31, 39. That's over 1%. I like a company that I know of, that I've heard of, that's on my list, that is over 1%. Well, great. This is over 1%. Let's take a look. Here's the high, here's the low, here's where it was, here's where it is, and this is the direction it's going. Yay! Let's take a gander. All right, so a year ago, 32.91 topped out back at the end of the year at 51.19. Look at this bottom. Holy cow. Look at this. We got a big gap down right here from 35 down to 32. That's not that big. It's only $3. But $3 on a $35 stock, that's a little bit less than 10%. Okay? But look, kind of channeling. No real rhyme or reason to it. It makes it difficult to figure out where she's going to be. So let's go last 30 days. Here's the last 30 days. Okay. Yeah, there's no real direction here. Sorry. Fascinating football videos. How you doing? So 30 days ago, here we are. Up, down, up, down, up, down, up, down, up. Look where we are. More than likely, she's gonna probably come back down again. But it's not really that good of a chart to look at because there's no real rhyme or reason to it. I mean, you have two big up days, Thursday and Friday. Look at this gap here. There's a possibility that they could turn around, fill this gap, and come down because your 30-day bottom's way down here in the 29.90 area. Okay, right now she's sitting at 31. It's not that big of a move. All right, Harold. Oh, hold on a second. Let's see, what does Intel normally do this time of year? For that, we look at seasonality. Okay, now as I was saying, the blue line represents this year. The red line represents 10 years worth of data. And we are right here at the beginning of July. Look at that. You cannot mistake this. I'm gonna zoom into that really quick. If that helps you out any. For the next couple of weeks. Okay, here's where we are right now with Intel. Now, this does not mean this is what it's going to do. Only thing this means is this is what it's done on average over the last 10 years. 2014, 15, 16, 17, 18, all the way up to last year. The last 10 years of data, this is what it normally does. Goes to the upside. Now, we're right here, 628. Okay, week number 1 right here. Week number 2, right, 5 and 13. And then week number 3. So for the next 3 weeks, this is going to the upside. Okay, if you like Intel, because it always comes down to that rule number 1. Do I like this company? And do I like this company at $31? Well, yeah, I like Intel at $31. I think I have Intel. Hold on a second. Nope. I got rid of my Intel last week. All right, sorry about that. I do have to check because I did have Intel, I think, last week or the week before, but apparently got bought out. All right, so where were we? Okay, let's keep going. That was Intel. Holy cow, I got 77 new questions. You guys just keep rolling up with questions. Warren Buffett owns it. I have no idea. 3M. Ooh, I like 3M. Let's quickly take a look at 3M. 1, 2, 3. Now, I have an issue with 3M. Issue I have, I think they were taken off of the Dividend Kings list. Okay? 102.37. The 102 is 120. That doesn't make you 1%, but it's close. The 103 is not even close. But do you like? I don't like where it is. Look where it is. Okay? You cannot mistake this. Look, goes up, pulls back, consistently going to the upside. Eventually, there's going to be pullback. Sorry, it's just like a couple of weeks of consistently going to the upside. There's going to be pullback eventually. I like 3M, I really do. Even though they got kicked off the Dividend Kings list because they dropped 67. Can you believe that? 67 years of increased dividends. New CEO comes in, gets a little nervous, cuts the dividend. What happens? You get kicked off the list. 67 years of increased dividends. And then he said, well, you know, whatever his reason is, I don't agree with it. All right. How long time do you think it will take before Nike will recover? Unfortunately, I got shares before the huge drop. Hakuna, I really can't tell you that one. Okay, we can look and see what happens on Monday. Now, we did take a look at. Take a look at this. Okay, this is what he's talking about. Nike. Okay, look, basically going sideways for a couple of weeks. Okay, and then on Thursday she's at 94. Friday she drops down to 75. I'm assuming that's some earnings BS or whatever it is. But do you think about it? Did they call up and make a press release saying, hey, we're laying off half our staff? Probably not. Hey, we're slowing down production? Probably not. Okay, what I think it is more than likely. Okay, so they got some bad news. What does that have to do with them making shoes? Okay, they make shoes, t-shirts, all that kind of gear with their name on it. Okay, great. What does the earnings report have to do with the stock price or the company itself? It has nothing to do with the company itself. And think about it. Okay, you get Sally who answers the phone. She comes to work every single day. Okay, Tom, the janitor who mops up the floor, he comes to work every single day. Do you think because the stock went from 94 to 75, they say, hey, Sally, I need you to cut your hours back. The stock went down. No, it doesn't work that way. People keep going to work and keep doing their job. That's what they do. What happens is the market maker, okay, the one who creates the market, he gets the report and he says, you know what I think I'm going to do? Because listen to this. You're going to like this. Actually, you're going to like it and you're going to hate it at the same time. Okay, so here we are looking at Nike. Okay, here's the Nike chart blown up a little bit with a little bit more detail. Okay, so I can show you my point. Now, if you're looking at this chart, okay, you'll have a better idea what we're talking about. Look at the stock. It's kind of like just going sideways. Okay, that's just the stock. But look down here. This is the volume of how many shares are traded on a daily basis. Okay, so let's go down and find out on average. Well, I brought my cursor down here. Look, on average, there's 10 million shares. Okay, so what does that mean? Okay, you ready for this? The bid, 75.14. The ask, 75.20. Okay, did anybody put that together? 75.14, 75.20. The market maker is making 6 cents per share. Yep, Hakuna, I saw that. 20% drop. Okay, so listen to this. Okay, hypothetically speaking, 6 cents per share. Average volume, 10 million shares. Okay, so let's take 6 cents per share. Break out your calculators because you're going to find this entertaining. 6 cents per share. Now, we're going to multiply that by average daily volume of 10 million shares, because that's what the market maker makes. Whether he buys or whether he sells is totally irrelevant. Stock can go up, stock can go down, stock can do anything it wants, but the market maker makes a profit with each share that's traded. Now, at 6 cents per share on average daily volume, 10 million shares, that comes to a grand total of $600,000 a day. Think about it, $600,000 a day. So let's see what happened on Friday. Okay, Friday, 128 million shares. So let's get that calculator out again. Let's clear that. Let's take our 6 cents per share, and now we're going to multiply it by 128 million. Okay, so he makes an average of 600,000 a day. Friday, the market maker made $7.6 million a share. What did he do? All he did is he took whatever information he got from that report. He said, you know what? you know what I'm going to do? I'm going to drop the price from $94 a share to $75 a share. Let's see what happens. Okay, so now you have 128 million shares being traded on Friday. Now, did something happen in the company where there was a huge drop in production, in manufacturing, in anything? Anything happened in the company itself, the manufacturing of the Nike products? Anything changed there? Probably not. The only thing that happened is corporate passed out an earnings report. Well, you know what? Let's find out exactly what it was. All right, what do we got? Nike stocks, see the biggest drop, ended with their biggest drop ever following the what? All right, biggest drop ever following the sneaker maker's pessimistic outlook a day earlier. Wall Street analysts were retrenching, with some even questioning the company's management. Nike shares finished, yeah, whatever. The sell-off marked, yep, bigger, whatever. Jim Duffett, blah, 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 blah. Management credibility is severely challenged, and potential for C-level regime change adds further uncertainty, he wrote. Doesn't say anything at all about production. Our key conclusion is there'll be no quick rebound for Nike earnings, Sol said, blah, blah, blah. We believe Nike is embarked on what we believe a multi-year reset for the business in order for it to return to healthy top-line growth rates. It just sounds like a bunch of crap to me. But what do I know? All I do know is look at the math. Okay? So, if you're a market maker and you get some news, does it actually change the production of the company? Are they actually changing how much is being made, how much is being bought, how much is being sold, just by a crappy report? No. But what does happen is the market maker takes advantage of that information. The market maker takes advantage of that information, and he drops the price. Okay? And what does he do? He increases the volume of shares being traded. Now, are those buyers or are those sellers? Because think about it, it's Nike. Nike's been around for years. Do you really think they're going away? I don't think so. All right, that being said, let's get some more questions. 87 questions, holy cow. So it's a maybe, I have no idea. There's a huge gap now in Nike, yep. Like your shirt, hey, all right, videos. Option on opinions on Disney this week. What's the name of this stock? Well, that was Nike. NSC, yep. Okay, we already took a look at Nike. Angel, oh, come on, some of these questions were on GLW. Who the heck is GLW? GLW. Corning. Ooh, I like Corning. Ron, what about BITX? Never heard of them. 38 to 39. Yeah, not your 1%. Sorry, Corning. 39, 30 cents. That's under 1%. If you really like it, look at the last 30 days. Okay. 30 days ago, we're down here. She shoots on up. Here's your 30-day high. Here's your pullback. Now she's going to the upside. I don't know how much upside you're going to get out of it, because look at here's your high and here's your bottom. There's a lot of profit taking potential right there. Okay, now when I say I like 2 days to the upside, well, you got your 2 days to the upside, 1, 2. Okay, and you'd have enough room to collect your 1%. Okay, so if you buy it at the 39, okay, 38.99, sell off the 39, you're going to add 30 cents. 30 cents is not 1%, and it doesn't make that happy. Ron, BITX. It's an ETF. That's going to be a no because I know they don't have 20 years of increased dividends. Sorry, Ron. Jimmy, coming up a new one. UPS, huh? UPS. 137s. Okay, 136.99 to 137s, 132. All right, you can get 1% out of that. Look at where we are down here. Here's your high of the year. Here's your low. Up, down, up, down, up, down, sideways. Okay, so what's the last 90 days look like? Check it out. Okay, interesting. Okay, last 90 days. Up, down, up, down, up, down, up, down, up, down, up. Okay, down right here. That's the upside. Okay, see the 30-day bottom here? She's starting to move to the upside, so let's look at the 30 days. What does 30 days tell me? Tell me, tell me, tell me, tell me, do you like it? All right, up, down, up, down, up, down, up. Okay, it's pretty much to see it. Okay, it is UPS. We all know who UPS is. Okay, last 30 days. Ooh, check out the seasonality. You can't mistake that for anything else. Take a look. Okay, here's where we are now. Okay, here's the blue dot right here. This represents now. This is 10 years worth of average movement. Okay, that right there should give you some indication. Doesn't guarantee it's going to do it. That's just historical performance. That's what it's done over the last 10 years on average. I like that one, Jimmy. Nice going. That's another good pick there, Jim. Way to go. You remind me of Alan Alda. You're like the 30th person who said that. What's up with SPY? Okay, SPY, S-P-Y, because apparently you guys don't like it when I say I don't like spiders, but you ask me anyway. Couple of reasons. Ready for a couple of reasons? Here we go. Reason number one, it's $540 over my price limit. Reason number two, it's at the high of the year. Okay, reason number three, it doesn't pay dividends. Okay? We going to fill the gap at 536-ish? I honestly couldn't tell you. I don't pay attention to the spiders. CLM. Kevin, how are you doing? Kevin, is that Rocky in your, it looks like, Kevin, it looks like Rocky in your little what do you call it, portrait thingy there? CLM, so you're like Clam, huh? Cornerstone has no options, that's a no. Sorry, Rocky. Ron, I do BTX. I've made great premium selling options on that stock. I've been wheeling it. All right, way to go. Or I think we rip next week's, especially when Powell speaks. Okay. Your residents, you say have the camera correct today so we can see your t-shirt and the monitor, yeah. Okay, exposing what, all right, you can also do buy right where you buy the stock and immediately sell a call on it. I do that. That's exactly what we do here. I also sell puts. I don't do puts, sorry, dude. More questions, CLM. All right, Kevin, you really want to do the CLM thing. Number one, CLM doesn't have any options whatsoever, okay? And it pays 10.5% monthly. I seriously doubt that. But let's take a look at Yahoo Finance. CLM. 15, 14, 13, 12, 11, 10, 9, 8, 7, 6, 5, 3, 2. Okay, so 2002 is 22 years. Okay, 22 years of dividends. Now, let's see how consistent they are with their increasing of their dividends. Okay, so 2002, 131, 133, 397, 133, 133, 139, 139, 139, 139, 139, 139. Is that, did I count that right? From 2003 to 2006, that's 3 years of not increasing. Okay, 2007, 149. Uh-oh, 149, 2007. Then 2008, they dropped it back down to 139. Oh no, 2008, it goes from 139 to 70. That's cutting it in half. Okay, so 70 and 09. Oh no, 010, they dropped it again to 56. This is not looking good for you, dude. 2011, they dropped it again to 51 cents a share. Oh no, 2012, they dropped it again to 44 cents a share. Oh, flying rat turds. 2013, they dropped it again to 41 cents a share. Oh, 2014, they dropped it. And you're telling me this is a good stock? Kevin, come on. What the hell were you thinking? Seriously, this is your money you're talking about. Take a look at the historical performance of them. They start out great, at 130. And they do 139 for quite a while. They go to 140. Then they drop 70, 60, 40. Now we're down to 38, 37, 28, 23, 24, 21, 19, 16. What are you shitting me? Really? 12? 11? They're at 11 cents a share now, dude. They went from a 139, $1.39 per share. Now they're at 11 cents a share, and you're saying it is a good company? Okay, hell no. What the hell are you thinking, dude? Seriously. But it's your money. You can do whatever you want with it. Okay, so let's look at one more thing. Let's pick on it just a little bit more. Oh, so here's a kick in the pants. You ready? Your dividend yield, 1.3%. That's your dividend yield, 1.3%. Okay, dividend full, all right, your forward dividend, $1.30. Okay, the yield, 16.9. Okay, 16.9 is not bad for the year. Think about it, not bad for the year. But they're consistently decreasing their dividend year after year after year. I bought it a while before he split. Okay, I have no idea, Sherry, what you're talking about. Because I look at 99 questions. I'm way behind. All right, sorry, Kev. I can't do CLM. It's a big fat no for me. I sell weekly and monthly options and pick up around 10 to 30 delta. Can you even do right at the money? Yep, exposing Pharaohs, you're correct. I like that idea. Way to go. Walgreens took a dive. Yes, it did. Exposing first. I'm new here, so you do weeklies or month. I don't do monthly options at all. And I don't even pay attention to the delta. If it's 1%, great. Blue Eye 732. All right. So you have the camera correct today so we can see your t-shirt. Hey, is what it is. Dividends, you got it. Decent volume, all right. I like the shirt, cool beans. All right, what do you think of HY? Never heard of HY. Who the heck is HY? Heister. Ooh, Heister yield, that's a no. You like it? It's a no. WBA, we already covered that a couple of times. What stocks are you looking at for Monday? Joe, that's for the trading group. How do you short stocks? I don't. Do you, Manny, need margin approval? Yep, you do. Uh-oh. Look at that. I missed all those. All those questions. Okay, what is the candles showing if both AMD calls on Monday? Well, let's take a look at AMD. AMD. Advanced Micro Divisions. Didn't we take a look at AMD before? AMD. Okay, dividends only for AMD. Yeah, no dividends on AMD. Sorry, can't help you out. I'm really picky about companies I put my money into. Okay, you guys can do whatever you want with your money. Honestly, you can. I don't tell people what to do. You ask me opinion, I'll give you my opinion. Okay, most of the time it's a no. Because there's only about 300 companies I say yes to. Now, we looked a little earlier today. IMMR. I've never even heard of IMMR. IMMR. That's a no also. Okay? Okay. What knowledge level do you require for your subscriptions. You're still a beginner. All right, Angel, wait, what time? What makes you say no to IMMR? Okay, you ready? Ready for this? What makes me say no? Monthly options. You cannot do weekly cash flow with monthly options. And at $9.42, the closest one's going to be the 10, and that's going for 5 cents per share. And I have got to hold it for 3 weeks. So that 5 cents per share, I got to divide that by 3 for my 1% per week. Now, on a $9 stock, I want to get at least 9 cents per share on a weekly basis. That's 1%. Okay, so this is not even, no, it's a monthly. I don't do monthlies. They never pay. Okay, so Angel, this trading strategy was created for a 9-year-old little girl. Okay, it's relatively simple. Okay, never buy something you don't want to hold long term. I've never heard of IMMR. Never heard of it. Why would I buy it? Okay? Now, never sell at a loss. Make sure the company has 20 years of increased dividends and weekly options. So you're looking for options. IMMR is a long-term hold. Yeah, my idea of a long-term is 3 weeks. That's my idea of a long-term. The longest I've ever held anything was 9 months. Now, it's not like I'm a new trader. I've been doing this for 20 years. I've never held anything for longer than 9 months because that's not what I'm looking for. I'm not looking to buy something and wait 30 years to cash it in. No, I'm 60 years old. I want cash flow. I want weekly cash flow. If I was going to do monthlies, if I was happy with 1 or 2% per month, yeah, I do monthlies. But no, I don't. I want 1% per week. Safe, predictable, consistent, 1% per week. Now, we go through a lot of stocks. I really do. Take a look. This is this week right here. Look at all those. Look at all the ones I looked at this week. Okay? This is all the one, right? This is all the ones I looked at last week. Okay? The week before. The week before. I could go back because the book is full of them. Okay, since the beginning of January. Since the beginning of January, you guys have me look at all this kind of stuff. All right? And most of it, 98% of what you guys tell me is no. Now, we looked a little while ago. 9,567 companies trade on a daily basis in the stock market. Out of that 9,567, yeah, only 300 hit my criteria. And I take that 300 and I put it through a calendar. Why a calendar? Well, first thing I want to know is, when are they paying their dividend? Because whenever they pay their dividend, the stock has a tendency to go up 2 weeks before the dividend. So take a look right here. Chevron, CVX. Okay? If I want to buy Chevron, I want to buy it on the 31st. Okay? The EX dividend date's right here on the 17th. Okay? 1 week, 2 weeks on a Monday. Okay? Buy the stock. Say if I'm buying the stock, let's say I buy it at $100. I want to sell it some for $100. What's the point of buying it at $100 and then selling it at $100? The point is collecting the premium, because the premium is usually 1% or higher. So if I buy it at $100, sell it at $100, how much money do I make off my stock? I make nothing. What do I make off the premium? Well, I make 1% or more. And if I do 1% or more every single week, that's over 50% per year. How long does it take? Just for the fun of it. And I told you I was going to do this. Okay, so you ready? So buckle up, Buttercup. Here we go. So I'm going to breeze through the next couple of stocks, and you tell me how complicated it is. Okay, so let's say, hypothetically speaking, now this is just all hypothetical. I'm going to go through about 10 companies, and you figure it out. All right? It's really not that difficult. So we're going to go through a week. Not that one. Let's do this week right here. Okay. Okay, so we're going to do this week right here. General Electric, Abbott Labs, AbbVie, Hormel, and PNC. Yeah, it's 5 companies you heard of. So let me show you how quick it actually is. This one right here. Okay. GE. Here we go. You ready? This is what I look at when I open up my account first thing Monday morning. Okay? General Electric. Here we go. GE. First thing I want to look at. 158.90, 39, 160s. Okay, 147. Great. Nice. Whoops, let's go back here for a second. Okay, bottom, top. Where's it moving to? Great. Last 30 days. Okay, and a downward trend, that's a no. ABV. ABBV. 170, 152, the 172, 75 cents, not even 1%, no thanks. Abbott Labs. ABT. 104.81, the 105s, 45 cents. Yeah, wait a second, look at that spread. I'm gonna look at the 104s. The 104 is 86. I don't like this right here. Look at that, it's in a downward trend, maybe next week. Hormel. HRL. Hormel. 30.50, 20 cents. Look at the spread, 20 to 125. I can get my 1% out of that. High, low, where was it? Where is it? Last 30 days, right there. Last 30 days, here's the high, here's the low. One to the upside, that looks good. And I'm getting my 1%. Great. I like Hormel. Wasn't that simple? Okay, let's go back again. PNC. PNC. 155.48. 155 is going for 190. Okay, I like that one. Okay, bottom. Where was it? Where is it? The high, the low. Okay, last 30 days. Here we go. Up, down, up, down, up, down to the upside. There's a gap there. That's a little bit strange right there. Okay, what does it normally do this time of year? Okay, goes sideways. I like that. So, I would wait for PNC to open up, but Hormel is a yes. That's all I do. It's actually that simple. You don't need to make it any more complicated than it has to be. First thing you want to look at is, when are they paying their dividends? Okay? When are they paying their dividends? Great. 2 weeks before the dividend. Okay, Lowe's right here, the 25th. 2 weeks before that, on a Monday, the 10th. Okay, first thing I want to see, after I look at the calendar, what am I buying it for? What am I selling it for? Because I want to sell the closest price to what I'm paying for. If I'm paying $164.37, I want to take a look at the 165, which is this is crazy. Look at the spread. So the 156, 157, 190. Okay, but you really have to check and see exactly where it is, because first thing Monday morning, all these numbers are going to change. Okay, you get a tighter bid and ask, closer to the last price. Then you can get what you're paying for, what you're collecting. Okay, then what's the chart telling you? Well, here's the high, low, going to the upside. Good, look at this part, because here's the high right here. Okay, it's going to challenge. When it goes up, it's going to challenge it, because we, as buyers and sellers, okay, we decide what's too high and what's too low. Now, we've already decided a month ago that it's not worth 159. If it's not worth 159 a month ago, well, what the hell makes us think it's worth 159 now? Okay? Now, it dropped down to 148. So what happens when it gets to 148? Oh shit, that's a good price. Let me buy some at 148. Okay, we buy at 148, she goes up. Okay, then we go, oh, I'm gonna take a little bit of that profit, goes back down again, and it stays in this line. Then it goes up, it goes down. That's all they do. They go up, they go down. When we, the buyers and sellers, saying, that's too expensive, well, it's not gonna go any higher. When we say, oh, that's cheap, I'm gonna buy some, well, then we buy it and the stock goes up. It's actually that easy. And what we do, we make things complicated by trying to figure things out. Well, simple, safe, predictable, consistent, okay? If it is a good company. Now, how do I describe a good company? Well, it has 20 years of increased dividends. It means they're consistently profitable. It's actually that simple. Most companies that open up today won't make it to 20 years. But here are companies that consistently share their profits and consistently profitable for 20 years or more. So great, I want a piece of that action. I am looking for a safe, predictable, consistent 1% per week. And I found a strategy that works. It was created for my 9-year-old daughter. And if you guys can't get it, just this might not be for you. It's actually that simple. If you don't understand it, it might not be for you. First thing I want to do is find out which stocks I like. Okay? How do you figure that out? Well, you get the Dividend Kings. 50 years of increased dividends. The Dividend Aristocrats, 25 years of increased dividends. The Dividend Champions, 25 years of increased dividends. The Dividend Contenders, 10 to 24 years of increased dividends. And then, of course, you get Warren Buffett's list, but that's kind of cheating. Because I actually, look at this, I actually have Warren Buffett's stock list. Hey, right there, Warren Buffett's stock list. Mendeley's, U.S. Bank, Verizon, American Express, Bristol Myers Squibb, MasterCard, Globe Life, Procter & Gamble, Bank Mellon, Ally, Aon Bank, ATV, Wells Fargo, Capital One Finance, DHI. Those are all owned by Warren Buffett. And guess what? If it's good enough for old Warren, boy, it's good enough for me. I don't even have to look at the numbers. I don't, because if it's good enough for Warren, it's good enough for me. That's simple. And then the other ones, Dividend Kings, Aristocrats, Champions, Contenders. Again, there's over 300 companies right there in those 5 lists. If you can't find a decent one there, I don't know how to help you. Seriously. All right. So, where are we? Wow, I got a lot more questions to answer. What knowledge level do you have to require to join the group? Actually, you don't need a knowledge level. You just have to have the desire to do it. Because once you join the morning trading group, if you want to join it, call me first. Well, send me your number. I'll give you a buzz. It might not be for you. Okay, we get on 9 a.m. Monday, Tuesday, Wednesday, Thursday. We go over all the stocks on my particular list because I do a podcast every single trading day. I have a website, the Dividend Stock Talk. It's a podcast that I've been doing for the past 4 years. There's over 900 episodes in that podcast series. Okay, 900 episodes. All right, so I do my own personal trading, and I have averaged over 1% per week for the last couple of years. I think last year was my worst year. I think I only got like 40% last year. I'm not 100% sure. I don't pay attention to that kind of stuff. All right, so Humana, H-U-M, isn't that H-U-M? H-U-M or H-U-M? Yeah, H-U-M. Yeah, I try to stay away from stocks over 300 bucks. And look at right here. Last 30 days. That baby is ripe for some profit taking. Look at the gap up and the amount of volume. Okay, now I personally won't do it because it's over 250 bucks. That's me personally. But take a look at the numbers. 379, what's the 380s going for? 0.5%? Yeah, no thanks. Oh, but wait a minute. Yeah, look at the last traded price, 373. So the 375 going for 350. That's probably closer, 350 to 4. So you probably get your 1% if you like Humana. But look, okay, here's your low here, slowly to the upside, and then she gaps up and shoots on up to 390. If you think there ain't going to be profit taken, you're up for a surprise. Spider does have dividends, okay, but it's still over 500 bucks. Oh, look at that. T-Web sent me a lightning bolt. Woohoo! Awesome. Thank you there, sir. I have no idea what it means, but thank you anyway. I'm assuming it's a good thing. No matches as AS. Is that ASF? What the hell is that? All right. Hershey. Ooh. HSY. Hershey. 186. Ooh, look at that. Okay. So 183, look at the 184, 185. Yeah, you might get your 1% out of there. But look at here. She drops, shoots up, drops. Look at the bottom right here. Exactly. And then 2 days to the upside. Yep, she might be going back up again. Hershey. Let's take a look at the last 30 days. 30-day high. It's up here at low of 200. Drops down to 182, triple bottom. Up, a little bit pullback, 2 days the upside, so Monday might be good if you like Hershey. Okay? Take a look at the numbers. Okay, you really can't go by this here because they're skewed. The last trade was 183.83, so looking at the 184s, okay, there is no 184, you get the 182.50, and then you get the 185. Okay, there's a possibility you could get your 1% out of it, but you have to wait until the market opens on Monday to find out what exact numbers are there. Now, sometimes the market maker gives us halfway decent numbers. Every once in a while, they don't. All right. Next. All right. All right, looked at Humana. Delivers small weapons, parts, and systems in Russia, Ukraine. Okay. V, I have no idea what you're talking about. TSM. That's going to be a no. Okay, TSM. Take a look. Here's your high, pulled back, the upside. Yeah, but there's way too much profit down here. Okay? And that's just only my humble opinion. If you like TSM, be my guest. Do what you want. You know, I give you my opinions. That's it. My opinion doesn't mean shit. Okay? Take a good look at what I'm saying and then do your own research. What is the chart telling you? The chart's telling me 30 days ago she's down here at 140. She goes up, pulls back. Goes up, gaps up, pulls back, goes up, pulls back, goes up. Okay, what is she going to do right here? There's not much higher to go to the 30-day high to challenge it. It could go up. Okay, but 174, okay, the 175s, okay, you're getting more than 1% there. But to me, I don't like where it is. Look how much space is down here between the 140 and the 180. Okay, it's a lot of space. And I don't like a lot of space, especially when my money's on the line. Okay, I like odds and probabilities in my favor. First, we just looked at Israel, yep. Rio is a no. That was quick. That's a no. No to Rio. APLD. Really? APLD. APLD. Interesting. Okay, let's take a look at YouTube. Yahoo, APLD. See how many years of increased dividends this company has had. 0. Alrighty. Who came up with this piece of crap? Sorry. What the hell are you thinking? Seriously? 20 years of increased dividends. This thing has no dividends at all. So why are we wasting our time on this? Okay, the name of the channel is Dividend Investing for Weekly Cash Flow. Dividend investing for weekly cash flow. If the company has no dividends, why are we bothering with it? Are tornadoes in LA really that crazy? Okay, PLTR, PTLR, wait, PLTR, that's a no. We already looked at that one. Jimmy, we already looked at Coles. Okay, Jimmy, we looked at Coles already. KSS. Or did we? Yeah, Coles is going to drop a little bit more. RITM. All right, good or bad, huh, Jim? All right, take a look. 23.30. Okay, the closest one is going to be 23.50. Or the 23. The 23 is going for 43 cents. That's not going to cut it because you're losing 30 cents right off the top. You take 30 cents off this, you're walking away with 12. That's a 0.5%. That don't work. The 23.50s is 15 cents. That don't work either. Sorry, Jim. I do love Coles, but this week the numbers just don't look right. Jacob, NEE. Nextera Energy. Interesting. NEE. Okay, they do have dividends. Let's see how often they increase their dividends. Nice, nice, interesting, nice. Take a look at that. From 1973, NEE is on my list somewhere. 86, did we look at Marvel yesterday? Okay, 1973 to 1983 didn't pay any dividends at all. Okay, 83 they paid 2. 84 they paid 4. Okay, so from 84, 6 cents, then to 7. They stayed at 7 for a while. Went to 8, to 6, to 7, to 8, to 9, 10, 11, 12, 13, 14, 15, 17, 19, 24, 28, 31, 35, 43, 47, 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. 52. Okay, well, they have a nice increase on the dividends, NEE. Okay, so 71.34. The 71's going for 71 to 98. You might be able to get it there. 72's now. Yeah, you'd be pushing it. 71, close to 1%. Let's take a look what's going on here. Okay, so the bottom of the year is back in October. She goes up, and then we get, look here from March. From the low in March at 54, she jumps up to 80.53, and then pulls back. The last 30 days. Huh. Take a look at that chart. Okay, 30 days ago at 77, we jumped up a little over 80 bucks around the beginning of the month, and then she drops right here on the 18th, shoots back up, pulls back. It would appear I would wait for the 2 bottom days, okay, because we don't know if this thing's going any lower on Monday or Tuesday, but I like 2 days to the upside before I jump in. That the EF5 tornado that day in May of 99 created winds around exceeding 300 miles an hour. Not quite sure, V, what that has to do with what we're talking about. Okay, but NextEra Energy, you're getting close to 1%. Okay, now I've personally never bought NextEra Energy. I would have to take a closer look at it because I have no idea anything about it. But let's go. All right, there's our dividends. This is statistics. It's at 71 bucks. Book value is $23 a share. Okay, I can deal with that. Summary, what do they pay per year? 2.9%. Oh, please tell me you don't put your money into this thing. Can you check RITM? Jeremy, I think we already checked RITM. I think it was a no an hour ago. RITM. No, it was no a couple hours ago. It's still a no now. Jeremy, why do I say no? It's monthly. $10.91. The 11 is going for, what is that? I can't quite get that number. It looks like a 0, but that can't be right. Why would I sell it for 0? If I'm buying it at $10.91, the 11 is going for 0, and I have to hold it for 3 weeks. It makes no sense. I don't like monthlies. You cannot get weekly cash flow with a monthly option. You need weekly options to do weekly cash flow. NOY, Jacob, that's a good one. What implied volatility do you look for an open interest? SIG, you're making it more complicated than it needs to be. Let me just show you something real quick, SIG, and see if you agree with me. NLY is a halfway decent company. All right, 19. Yeah, how about I pick one that's better because NOY is not giving me anything to go off of. All right. Okay. SIG, you ready for this? This is going to be for you specifically, SIG. All right? Macy's. Macy's has been in business for over 100 years. The current price is $19.20. Okay? I like Macy's. I actually own some Macy's. I actually own a lot of Macy's. Okay? I buy it, and I usually out within a week. And then I buy it again, and I'm usually out in a week. Because I like the cash flow that Macy's gives me. Okay, so what are we looking at? If I'm buying it for $19.20, right? And I sell the 19s, and I'm bringing in 46 cents a share. Okay? Now, let's go through the math a little bit. If I'm buying it at $19.20, I'm selling it at 19, well, I'm losing 20 cents a share, correct? However, I'm collecting a 46-cent premium. So if I subtract the 20 cents that I'm losing in this deal that I'm making here, I'm only actually walking away with a 26-cent profit. Okay, 26-cent profit. What does that mean on a $19 stock? Let's clear this out. 26-cent profit, correct? You following me so far? And I'm dividing it by the purchase price. Now I'm going to divide it by 19, not 1920, because I've already taken the 20 cents out of the equation. All right? So it comes to a grand total of 1.36% for the week. Okay? Now, let's take a look at open interest, because your intrinsic probability open interest. Here we go. The 19s. Okay, so let me ask you this for just rough idea. All right, now open interest for the 19s are 1,208 contracts. All right, what? Explain to me in a manner in which I might understand, because I didn't go to college. You have to make it really simple for me. Okay, so what does 1,208 contracts have to do with the fact that I'm walking away with 26 cents, which is 1.3% of what I'm selling? The percentage that I'm walking away with, what does that have to do with the amount of contracts that are open? I mean, think about it. If I'm buying it at 19.20, I'm selling it at 19. Okay? All the stock has to do, doesn't have to do anything. It's got to stay above 19. Well, right at the moment, it's at 19.20. Okay, 30 days ago, we had a high way up here. She drops down, pulls back, drops down, pulls back, drops down with a gap. Now she's going to the upside. Okay, I think that's going up. So what does seasonality tell me? Seasonally, this is where we are right here. Seasonally, she should go sideways for this week. Okay, for this week. Next week, she should drop a little bit. The week after that, she should go back up. Hypothetically speaking, that's what she's done in the past. Does that mean that's what it's going to do? Doesn't mean that at all. That means we're looking in the rearview mirror as we're going forward. That's what it's done in the past. Doesn't guarantee anything. So again, the question comes back to, if I'm buying it at 19.20, selling it for 19, bringing in 26 cents, which is over 1.36% for the week. Now I'm doing weekly here, okay? All the stock has to do is stay exactly where it is or go up. It just so happens to be in an upward trend at the moment. See, here's the bottom, she goes up, she pulls back, and now she's in an upward trend. Okay, she went up, she pulled back, now she's going back up again. It's in an upward trend. I'm getting over 1%. The company's been in business for over 100 years. All right? I don't see where implied volatility falls into the equation anywhere. Okay? And then let's step back a couple steps for a second and figure out where the hell did the trading strategy come from? It came from a 9-year-old that wanted to do what her dad was doing. It had to be simple, safe, predictable, consistent, and no way for her to lose. So, if you do simple steps, never buy something you don't want to own long term. I got no problems with Macy's whatsoever. Never settle a loss, no problems holding on to it and never selling it. As long as I'm getting that 1 or 2% every single week, I'll hold on to Macy's all the time. 20 years of increased dividends, well, Macy's is a dividend king. Weekly options, well, Macy's got that. Make sure the numbers work. Well, the numbers do work. However, implied volatility and open interest and volume got nothing to do with the equation whatsoever. What has to do with the equation is, do I like Macy's? Do the numbers work? Do I mind holding on to Macy's? Well, I have no problem holding on to Macy's. I have no problem with that whatsoever. And it's giving me a nice premium on a weekly basis. So, SIG, implied volatility has absolutely nothing to do with my strategy whatsoever. Hope that answers your question. We got 20 more questions. And we got 2 minutes. If you exit the stock and get called out, do do you get back in? It all depends on the numbers and it depends on when the dividend is being paid. I'm sorry, but this is nonsense. Castor Troy, I love people like you who don't have a clue what numbers actually mean. If I'm buying a stock at 19.20 and I'm selling the stock at 19 and I'm collecting 42 cents, 46 cents per share, I'm walking away with 1.3% profit for the week, and the stock doesn't have to do jack shit, nothing, because it's already at 19.20. Could stay exactly where it is, and I'm still making my money. And you think it's nonsense? Hey, we're all entitled to our own opinions. Okay? Terribly sorry if you don't understand simple math. Okay, I'm in Hormel now, and likely would never do them again, as there's no option plays for liquidity. Oh, Secretariat. I actually have some Hormel. All right, Sig. If you exit the stock or get called out, do you get back in? Well, now, Sig, what I do is I look at the calendar. So I find out when they're paying their dividend. And I get in 2 weeks before the dividend. Because most of the stocks that I look at have a tendency to go up just before the EX date. Okay, the EX date is the little green dots on here. So if I'm looking at Bank Mellon, I want to do Bank Mellon. So here's on the 27th here, on the 2 weeks, which is the 10th. So if I buy it here on the 10th, collect a premium. If it hits my target, great. If it doesn't hit my target, well, I'll do it again. Okay, if it hits my target by Friday, great. If not, I'll do it again. If it hits my target, I don't really care because it's premium dividend. Okay, that's quadrupling or that's tripling my returns normal people get when they buy and just hold for the dividends. Okay? Are your trades on Monday and get it on Friday? In a perfect world, Sig, yes. Okay, does it happen all the time? No. Now, most of the time it does, not always. But I do average 1% per week. Okay, counting up, now I share two accounts. Account number one's over 31%. We're in week number 26. Okay, as of Monday, that's week number 27. So I'm already up over 31% in account number one. So that's over 1% per week. Account number two, we're over 69%. That's more than 2% per week. But that's a margin account. It's a little bit different. Invite Digger, nope. Winner 86, Chris Croft, yep, that's goal, 1% per week. Okay, Secretariat, yep. Yeah. Yeah. We got rid of Castor. Hey, I wanted to hear what he had to say. He thinks it's nonsense. Everybody's entitled to their own opinion. I'm not normal. I don't do what normal people do. You tell me to go right, I go left. You tell me to go straight, I go either way I want. I don't like being told what I can and can't do. If I look at something, if anything comes from this whatsoever, okay, all I ask is, does it make sense? Number one, never buy a company you don't want to own long term. That's really pretty simple. I get no problems with Macy's whatsoever. Where are we, Macy's? Okay, let's go back to that. What was that again? Yeah, take a look at this list. This is Warren Buffett's list. I have no problem whatsoever buying any one of these companies. Okay, Mendeley's, U.S. Bank, Globe Life, American Express, Bristol Myers Squibb, MasterCard, Verizon, AbbVie, Procter & Gamble, Bank Mellon, Alley, Aon, ATV, WFC, COF, DHI. I have no problems with any one of those companies. If it's good enough for Warren Buffett, it's good enough for me. But you know what's better than that? Okay, if I buy GL, Globe Life, okay, I get my 1%. I say, thank you very much. I'll see you again in 90 days. Why do I want to hold it? I'm looking for a safe, predictable, consistent 1% per week. I'm not looking to own anything. I want cash flow. I don't want stock appreciation. Okay, if you're looking for stock appreciation, you're in the wrong place. It's 11:30. You guys have a great night. I'll see you again tomorrow.